All right, welcome back to the program. In case you're just joining us, it's still Moneyline with Nancy, and my guest is joining me virtually right now, virtually from Lagos. He's Olusegun Zaccheus. He's the lead and partner PwC strategy and practice in the West markets. Hello, Mr. Zaccheus, and thank you for joining us.
Hi, Nancy. Good morning. I hope you're keeping well.
Yes, I am keeping well. How are you? Long time no see. How you
Okay,
doing?
I'm all good. Thank you very much. I'm doing very well. Thank you. I'm good to be here again. Yeah.
Fantastic. Now let's get started. For PwC, your team, which you had, uh, you released an economic outlook just a few days ago. I've gone through it really, but I think I need to begin from what is really happening right now locally relating to your report. And let's take it from those 43 items, the lifting of the FX restriction on the 43 items, because even your economic outlook was also based on the impact of global trends on Nigerian foreign exchange market. So what do you think about that move by the Apex Bank first? Let me get your views on that. Is it is it an okay move? Is it a smart move? Will it really move the needle? Because those items, the importance of those items were already found in the parallel market because they can't get access to official window. And now there is no supply, even in the official window. So will it make any sense? That's what I'm thinking though, but talk to me about your views.
Yeah, thanks, Nancy, for that question. I think that question is really pertinent. But there are two things you need to look at, right? And the first thing is around policy communication and what your FX policy story is. That's one. And the second bit is the reality of the aggregate, supply and demand within the FX market, right? So let's start from the latter. If you ask me, will the policy make a difference within the FX market rate? I would say maybe not quite from an aggregate demand perspective, because the demand is there. It's just a question of where should the demand be? Should the demand come through the official market or should it be in parallel market, right? So the demand is demand. The demand is not changing. That's one. But what this does from a policy perspective is a bit of clarity and transparency within the policy for FX market. And it sort of gives investors confidence in the market that look, production process, will have access, to the right market for them to source FX, right? So from that perspective, what we're communicating to investors is that look, we have an FX market, an FX policy that is moving away from the aggregate demand management, right? And to an FX policy that is a bit more liberalized. So all willing buyer can have access to the market and be able to access FX, right? But if you then ask the question, will this solve the fundamental problem? I think one of the fundamental problems we have is really aggregate supply of FX within the market. This solves a problem in one way, which is creating investor confidence. And if we take this consistent over the short to medium term, as investor confidence builds in the market, it means the possibility of bringing in more supply or even the confidence to retain the current FX you have in the local market within the market without demanding to be pulled out also increases. So by and by, this is a positive development for the FX market. It's a positive development for how the investor feels our market, and it's also a positive development for the policy around the FX market. I think what's fundamental is that I think the central bank is beginning to put together an FX management story that is progressive, that reflects the need of the market. And from if you take it from that view, it's a positive development. In the short term, it may not add to the aggregate supply, it may not even reduce the aggregate demand, but in the medium term, it tells a good FX story, and you expect a better FX environment in the short to medium term.
So what you're saying, in essence, what I hear is that the Apex Bank is seemingly communicating that at least we have a flexible FX market now that should be dictated by, at least in the official markets, not that derogating the parallel market. But Zach, speak to me really about supply stability of the supply, stability of the naira, and the naira's value at this point, because it's noted that we do not have supply of FX. Of course, Nigeria, the CBN does not print dollar. We need to engage in productive areas. We need to be engaged productively in the country to be able to earn foreign exchange. And we're seeing right now what's even happening globally. So speak to me about supply of FX, about the stability of naira, and perhaps if all things being equal, like they say, where would you see, or where do you see the naira against the dollar? What value? I mean value
Thanks.
now. If you can give me a figure.
Yeah, thanks. Thanks. Honestly, Nancy, there are a couple of points to consider, right? And the question you ask yourself, if you look at the Nigerian market, what has historically been the source of FX into the market, right? It's been oil revenue, which we all know. It's been foreign direct investment and foreign portfolio investment, right? It's been some financial structuring like swap etc. That the central bank has done with various private sector in the past, right? These are the three main sources. If you look at the data very closely, you realize that in the past few years, the proportion of FX from oil revenue has been changing, and you're getting a lot more from structuring around financial instruments, etc., and all that, right? The truth is that what determines the FX supply in the long run is the quality of investors' confidence, right? That is really very important. And then if you then take from the oil supply perspective, there's a major externality that you cannot really control, which is what is happening within the OPEC quota, oil prices movement, and all that. But obviously, increasing production will always improve that aspect. But more importantly, a more sustainable way is to create an economy in which foreign investment can come in and find their way easily. And you also know that this has also been pressure given some of the global development. You know, the interest rate in advanced economy is really high, and there's been a lot of capital reallocation focus, chasing yield. But the reality is that once we have a good FX policy environment, when investor confidence also increases, the chances for a more structural increase in FX supply into the economy are even higher, than when you then try to create a policy that restricting demand, that is limiting investors' ability to move, their money out of the economy, right? So those are the constraints that you need to deal when it comes to supply. And easing of supply is a medium-term issue, right? And while the federal ministry of finance can create, different avenues, creative avenue to sort of affect the short-term liquidity. But the long-term liquidity of FX within the market is structural. It's going to take a bit of time, right, for us to achieve that. And fundamental to that for me is the quality of investor confidence you have within the Nigerian market. And investor means the capital market investor, the people investing, bringing in foreign direct investment into Nigeria. That's really very important. Then when I go to your second question, which is around what would the value of the naira be? My opinion right now is that the process of price discovery is a bit dysfunctional, right? And let me tell you why. Because we have pent up demand, right, of close to 6 to 7 billion, within the Nigerian market, and that demand has not been cleared. So price realization currently is, for me, it's a bit artificial until we get to a point of equilibrium, right, where the market demand and supply, can begin to play. That's why we realize what the appropriate pricing of naira will be. But before we get there, there will always be pressure because of the pent up demand, you have within the market, given some of the forwards that have not been paid back, etc., and all that, right? So essentially, what government must do must be a bit sequential. This problem is not going to be solved in the short term, right? But as government consider various short-term liquidity injection to the FX market, like some of the borrowing, some of the arrangement they want to make, that will help. But fundamentally, to get a sustainable FX market, you need to communicate a clear FX management story to investor, and you need to execute and be consistent with the execution of that policy, so that there are no adversarial policy reversal, when you start up going one policy direction, etc. So it's really tricky, and to be honest, and I think the federal government is doing as much as they can, but we need to be consistent with the execution, and the monetary authority should communicate a clear policy. And the other point is really borrowing may be form part of getting us out of the wood in the short term, and which government must of no doubt consider as it implement potpourri of policy to sort of stabilize the FX market. But at the end of the day, it's not really an FX story alone. It's an FX policy that drives economic growth and that creates a sustainable growth and development within the Nigerian economy. So we all need to tie all this together, right, to ensure that, look, the overall objective is a sustainable and a very good economic growth that's more than 6%, right? That should be the function of any policy that we're going to be putting together for Nigeria as a nation.
Olusegun, you've said so much, and let me try to dissect all, all the points which you have made. In terms of even what you're saying, I'm even getting more questions from your answers, but you said some things that are very critical. In terms of the pricing that we're seeing right now in the FX market is artificial because there's still a lot of backlog there, about $8 billion backlog, excluding even the forwards that might be close to $20 billion. And my question there is that if the... You know why I'm just giving this you know I'm just giving this sound. The central bank is in a quagmire, seriously, because there is no financial muscle for that right now. Though the foreign exchange reserves were told at about over $30 billion, but who knows? Because some times ago, I think JP Morgan, I think it was JP Morgan, is it Goldman Sachs, that came up with some kind of fictitious story, and the Central Bank of Nigeria cleared it at that point. So that is one. The second part again is the point of production, which you mentioned, that Nigeria is an economy that is hinged on just one monoproduct. That's just one product, which is oil. But would you see this as good news now coming in from the NUPRC, the Upstream Regulatory Commission? Just a few days ago, that Nigeria is now producing 1.35, about 1.3 to 1.4, because I also listened in to the Minister of Petroleum Resources States, Minister Lupobiri, and thank God he's speaking now. I gave him a jab last week that I've not heard from you, and he spoke just a few days later. 1.3 to 1.4 million barrels a day of oil. But if you put condensates, the NNPCL, GMD, did talk about 1.6 million barrels. So is that good news? Olusegun, I'm going to bombard you this second. The third one is you talked about investors' confidence. And what was coming to my mind, it's about the companies in Nigeria that are seemingly that we're bringing in even foreign exchange and also a part of our foreign exchange earnings. So talking about even FDI, you see that GSK has pulled out of Nigeria. Which other company? Guinness Nigeria. I need to mention names so that the government will see this as serious. Guinness Nigeria says it will discontinue the import and the distribution of many of its major products. For those that drink alcohol, Bailey's, what do they call it? Is it the rum or something? Yes, Bailey's. It will also discontinue Johnny Walker. You're also taking a look at Unilever, saying that it would reduce the production of Lux, that it reduces the production of Lux soap, Sunlight, and I think Lifebuoy. I needed to mention names this morning so that we understand the precarious situation which we are in. So if you put all of this together, where do we go from here regarding industry, trade, and investment? Because it's one issue. We cannot blame the CBN. CBN is not printing dollars. It's not theirs to print dollars. Every other person is to get earnings, non-oil export, to get earnings in dollars, and they give to the CBN. So what role should the Ministry of Industry, Trade, and Investment play right now, even as President Tinubu changed all the chief executives under that ministry last Friday? Sorry, Shagun, I needed to bombard you, but they were okay coming out from what you mentioned earlier.
Yeah, thanks, Nancy, for the excellent question. I think, are we in a tough situation? I think the answer is yes. Have other countries been in this situation? Have they gotten out of it? The answer is also yes, right? I think for us as a nation, there are a couple of things that are very important, right? Let's understand the situation as it is. It is tough. We lack FX liquidity. Even in the production, oil production that has increased, which is really good. I was looking at the numbers. The OPEC quota plan for 2024 to 2024 is between 1.3 to 1.5. So it means even if we increase our production, we can only inch it to about 1.5 million barrel per day, right? That is not going to save us, right? So let's just realize that from oil production perspective, while it will help cushion a bit, that can be the main supply, for us to affect. So having the right policy that liberalize the market, that creates investors' confidence, that attract investors is really critical. I think that's very important, yeah, for us as a nation. And we have to be consistent with our policy direction and execute consistently so that investors can have confidence in the economy. That's number one. Number two, to talk about the reality of some exit into the market. I
Yeah.
think the truth is that when in times like this, there will always be disruption in which company have to reappraise their best way to respond to the local market, right? The truth we also understand is that look, while this is a tough and rough patch, right? Companies also has to be creative to find a way of further domesticating their supply chain, which further enhance their ability to thrive within a limited dollar supply environment. And what I'm expecting the Ministry of Trade to continue to encourage is to help companies create, creative ways to domesticate their supply chain as much as possible, in which their demand for FX is limited and they can sort of adapt within the reality we have. Obviously, it's pretty difficult because quite significant input into our production process, our manufacturing industry is important. In fact, I was speaking to one manufacturer. I said almost 90%, of part of the production process is imported. So you can as well be importing the
Mm.
full product, right? So that's critical area that the ministry must encourage how to domesticate supply chain and sort of develop our local supply chain. Right. I think the other point that is critical, right, and I don't want us to take a pessimistic view. I think
Mm.
from a government perspective, the potpourri of policy that we've seen in the past few weeks are positive, are in the right direction, right? It's just that willingness to sustain this and add additional policy that sort of facilitate industrialization to this will be what is required, right? And that policy consistency is really very important. And I think the last point is policy congruence between both the fiscal, the monetary authority, and even policy around sectoral development. There has to be a congruence that brings everything together in a way that we are achieving a reasonable growth while maintaining price stability, which is the pressure of inflation that the monetary authority must pay attention in dealing with, right? It's really a difficult situation, but a sequence policy that is deliberate, that's consistent, that is followed through, I believe can take us out of the woods.
Do you think that this administration is listening to everything that we're saying? Do you think that this administration have also listened to the communication that have come out from Nigerians in terms of even the handling of this economy? Analysts like you, a lot of analysts on my show have said this countless times. Do you think that this administration is listening? And do you think that they even have the wherewithal to be able to get out of this quagmire in the medium term? Let me not say short term, because short term we have a lot of challenges, but in the midterm, at least being a bit objective.
Thanks. That's a tough question, but I'm going to answer it this way. I think some of the policies I've seen, some of the pronouncements I've seen, have shown consistency and clarity of direction of the government, right? Obviously in the early stages, but I'm sure if we build on this, right, I'm sure we will be on the right direction. So I'm confident from what I've seen so far that this government has the capability and they are thinking in the right way. And what everyone must understand that for fiscal authority, they just don't balance economic growth. They balance economic growth with economic development
Mm.
and with preserving the social fabric of Nigeria. As for example, if people are saying the government is spending money and will drive inflation, but don't forget, you must have a society that is almost equitable. We must have bottom of the pyramid whose income has been disproportionately affected, intervene to, right? And so creating a balance from a fiscal perspective of both the economic growth and economic development, right, is really critical. And so what we are saying so far has shown that there's a consciousness of that. Obviously, execution is another angle to this. But from the
Mm.
policy we've seen so far, I think the current government understands right, and is moving in the right direction to take us out of the woods.
For your organization, you're optimistic that Nigeria will end with an economic growth of 2.8% this year. If we take a look at the first two quarters, 2.3% in the first quarter, 2.5% in the second quarter, an average so far of 2.4%. What are you predicating that 2.8% growth, which is still a bit fragile compared to Nigeria's population growth? Then secondly, you had also looked at inflation. In your report, you said that inflation will continue in the short to medium term as a result of the PMS subsidy removal. And are you concerned that perhaps subsidy is back, even though that the government does not want to admit it? And even if they are not admitting it, I'm wondering where they are getting the money right now to still allow petrol price to sell within the 600 naira margin. When we know that inflation has crept in, when we know that landing costs have also increased, when we know that oil prices have actually increased close to $100 even last month, but now oscillating around 90 US dollars. Please help me make sense of this all.
Thanks, Nancy. Let me start from your latter part of your question. I think we also always need to put all things in perspective, right? Oil price was less than fuel price was less than 200 naira some few weeks ago, and is gone to maybe about 600 right now, right? That's a significant liability, if I use the word, taken out of the government, part of revenue, right? If governments decide to sort of help modulate prices, obviously I won't be so concerned about it, right? Because when you have a significant removal of subsidies and you have 400 naira per liter added to price of petroleum, right? I think that's a significant breathing space for the government, and so for me personally, I am not bothered so much around what subsidy is now, because I think we've created some fiscal space by moving from where we
Okay,
are
okay, Shegun,
then
just
to
hold on.
now.
So
Yeah.
from what you're saying right
Yes.
now, subsidy is going on right now, even though the government does not want to admit it, but not in the quantum of before, when we were buying at the pumps for 185, 195, 200. Subsidy is still
Yeah.
on.
So I think yes, I think for me it's a matter of the quantum, because to be honest, if you consider all the pass through to inflation, etc., and all that, right, there'll be some level of modulation to sort of smoothen out things, right? And I really don't know what the specific government policy around this is exactly at this point, and how this is being funded. But I think I won't be so concerned, right, about what it is right now. I think I need to be more concerned about what other policies government is putting in place to sort of balance up even the subsidy that has been removed so far in the past few in the past few months, and the impact on that on the general population, right? We also need to think about that very, very critically, because removal of subsidy has significant impact on income, on inflation, as we have seen, and we showed in our graph. So I will be more concerned about that. I'll be concerned about all that policy government is sort of executing or defining to guide the development of the economic growth. And to then go to your other question around the broad economic growth, I think our view on the economic growth is premised on the fact that in the latter part of the year, we see a couple of economic sector going a bit more strongly than they've been, in the past few years. And the shock, that arises in the early part of the year from cash crunch and from the shock from the introduction or removal of subsidy and the pressure of exchange rate should stabilize a bit, right? And once those shocks are stabilized, economic growth and activity should pick up and dramatically, plus other sort of intervention by government, which will also enhance consumption. And we expect all that to have a better impact on the economy in second half of the year. So that's really the thinking that we'll see. But we'll see what the numbers show. But that's really the thinking that led to the forecast that we've shared as PwC.
Okay, still taking it from that economic growth forecast which you mentioned, 2.8%. That's what you and your colleagues see for this year. That is as we run through the end of the year. Are they concerned that I don't want to be an angel of doom, but are they concerned that if we don't fix this challenges that we have, if we don't fix these challenges, are there recessionary fears, concerns? Because this economic growth is a delicate economic growth. if we continue like this, talking about FX challenges, talking about high inflation, talking about the fiscal authorities not being so responsive, though the Minister of Finance has said, you mentioned borrowing earlier, and what came to my mind was that at the IMF World Bank concluded meetings just a few days ago, Wale Edu mentioned the $1.5 billion loan to be secured from the World Bank. The IMF has also told Nigeria, has given Nigeria an open check. If you consider borrowing from us a good option, by all means, come, we will lend you money. So in the midst of all of this, is there, are there fears for you that we may enter into a recession if we don't do things right? I don't want to be an angel of doom, but those are also economic forecasts if you don't do things right.
Yeah. Thanks. I think that's a fair question. And if you look historically at all the recession we've had as Nigeria, you realize that it's driven by external shock, right? You see oil price reducing dramatically. You see global demand plummeting, right, as a result of COVID, etc., and all that, right? In the next few months, I think our view of the risk of recession is very low, right? We may not, worst case, given the downside risk, we may not achieve as much as we have thought, right? But going into negative growth territory will be more unlikely, right? That's what we see. And given some of the intervention by government and seeing some of the stability that we're seeing, even broadly within the market due to policy pronouncement, etc., we don't expect a significant deterioration in growth, except if you then have a major shock that is geopolitical, given some of the wars that we're seeing around, or you see oil price plummet dramatically low, which is very unlikely in the next 6 months. We see a more low growth environment, which is what we've been in the past 3 to 4 years. That's what we see us modeling through over the next half of the year.
What do you think for monetary policy? Because from your report too, you are advocating or you are seeing that there will be further tightening. Are you concerned about over tightening? Are you concerned about over tightening? Because the tightening we've seen have not really reduced inflation, though the Central Bank of Nigeria has also argued that if we did not tighten to this manner, inflation would have been at 30%. NBS will release inflation results in a few days, if not today, isn't it? I can't really place it. But are you concerned about over-tightening? Then I also want to talk about even fiscal policy. The tertiary education tax has also been raised from 2.5% to 3%. I don't know if people really realized it. From September 1, 2023, that just softly plummeted into, just entered and nobody's thinking about that. So that's tertiary education tax to 3%. So what do you think about all this? We have a few minutes to go. 2 minutes, I guess.
Okay, thanks. So thanks, Nancy. To answer your first question, if you want to take a classical economic views, which is what has happened in all the other countries, when you have high inflation, really what you want to do is to tighten interest rates, right? But sometimes the argument that maybe our inflation is supply chain driven, is cost-based bottleneck, right? But honestly, I think the reality is that interest rate still needs to go up, because if you want to attract foreign investor and you're dealing with an era of negative yield, right, you need to find a way to sort of also address that, right? I think interest rate should be tightened, right? But what is also important is to find alternative ways to address the impact of that tightening, especially on the most vulnerable part of the economy. I think that's an important point. Obviously, if you read the note from central bank, if there are other ways of intervention by financing, and a low interest rate for vulnerable element also of the economy, right? That should also be done. But for us to really get to a terrain in which even the real return makes sense, right? There has to be pressure on interest rate. So it's how the government, both the monetary authority and the fiscal authority, balance all this policy. Because if you tighten interest rate, means cost of borrowing is high. Then how can I sort of intervene and help vulnerable segment, my SMEs, to get access to fund, right? Through development finance that is probably driven by government or any other entity of the government, right?
Okay, Shegu, just very quickly, because we are to round up. What I mentioned
Yeah.
earlier, 3% tertiary education tax, how do you see it impacting businesses that are struggling right now? Very quickly. And what is your inflation outlook, even as we round up the year?
Okay, I think like all taxes, they have negative impact. But what I expect from the Fiscal Commission on taxes, etc., is to bring all these taxes together and in a harmonized format. So I will reserve my comment until we have the work of the Fiscal Committee done. In terms of inflation, we expect there to still be pressured in the next few months until we get to the point of stability. So that's what we see from that perspective.
Okay, Shegu, 30 seconds. In all that we have seen, positive, should we see positive or should we see negative? What do you see, even in the crystal ball, and what should we focus on despite the negatives around us?
Yeah, this is how I tell my clients, right? I would not focus so much on what the outlook is. It's for every organization to build resilience to navigate the challenges ahead. So
Okay.
there are going to be challenges in the short term, and I'm confident that will come out, better, in another 1 to 18 months. But every organization has responsibility to have strategy and responses that make them resilient, to wade through these challenges and to also prepare for the upside, right? You can't just throw in the gauntlet as an organization. You must put in place strategies that help you navigate now and prepare you for the growth that we expect to see in the next few years.
Okay. Thank you very much, Shegun. Of course,
Yeah,
between now and the
thanks, Nancy.
next 18 months is not going to be as soft for us. The thing is that make all of us no die. Let's be alive to see the good, the light at the end of the tunnel. So thank you very much for coming on
Thank
the
you, so
show.
it's a pleasure to be here, Nancy.
Likewise,
Bye.
it's a pleasure having you. I've
Bye.
been speaking with Olusegun Zaccheuus, who's the lead and partner PwC Strategy and Practice in the West Market. That's the much we can take on today's edition of the program. Thank you all for joining us. Join us again tomorrow, same time on this station. I am Nancy Naji. Be the best you can be and be the change that you want to see.